So Wonderla Holidays, the stock in focus up almost doubled in the last 1 year. The company said it's witnessing strong performance led by increase in domestic tourism, revival of student excursion trips, etc. So to discuss how those trends have fared in the fourth quarter so far, we have Arun K Chittilappilly, who's the MD at the company. Arun, always a pleasure speaking with you. I remember you telling us, that the fourth quarter is expected to be, as good in terms of demand momentum year on year as the third quarter was. Year on year, of course, the third quarter is seasonally stronger
Yes.
than the fourth one. How has that sustained so far? Are we likely to see the same levels of growth in the fourth quarter year on year as we did in the third quarter?
Sorry, I lost you there. So,
I just wanted to know how the growth trends have been in the fourth quarter year on year as against the third quarter.
so, I think we are seeing a similar uptick in our footfalls and demand for our fourth quarter so far. So, like I said earlier in my last interview, we were hoping that the demand will continue to be strong, and it has shown that. So, we are quite happy. Having said that, I think after this quarter, next financial year onwards, we're not expecting that kind of growth, obviously, because we're starting on a high base. But this quarter is also looking pretty strong. Yes.
Okay, so looking strong in terms of demand, can you give us a sense of how much higher are the footfalls so far versus quarter three? Just a ballpark number here. And have you been able to see an increase in average rent as well, or there has been any pricing difference that you've seen in quarter four?
So in terms of demand, it's kind of tracking what we did in quarter three in terms of demand and how it's going. ARPU and price increases also will track what has happened in quarter three, because last year we had a much lower price. Yeah, so I think demand and ARPU wise, we are good. Having said that, Q4 is not really it's not the strongest of quarters for us. So we get mostly discounted footfalls from schools and colleges. So ARPU will take a bit of a hit. But at the same time, I think it's because there is still a lot of latent demand in terms of people wanting to come out and, for excursions, to outings, day outings, things like that. We are seeing a strong demand, even, what is traditionally not a very strong quarter.
Latent demand is, perking business up in the fourth quarter in an otherwise weak quarter. But, just understanding how the parameters for next year would look like for you. Primarily because one, like you said, you will be at a high base. Secondly, you'll be in investment mode for both your, Chennai and Odisha parks. Third, most importantly, the latent demand for people to go out may also at some point normalize. So, is the best of all these numbers in your existing parks going to be behind the company? If not, at least the growth parameters, what are you gunning for in FY24? If you could give us a sense.
See, because we're starting from a very high base this year, expecting that kind of growth next year doesn't make sense. But we are still expecting some growth, in terms of, we are expecting at least 5 to 10% kind of footfall growth for the next year. And ARPU increase will be another 10 to 12%. So I think that is the kind of numbers we are looking for the next financial year.
Okay. So that means 17 to 18% revenue growth. I mean, assuming all things, fall in place and synergies are a little more than the ARPU plus footfall, 20% growth is what you're targeting.
Yeah, so I mean, again, it remains to be seen how it's going to actually pan out. But this is the kind of number that we are internally looking at. But I think it's reasonable and maybe conservative. But let's see. I mean, we don't know how it's going to pan out, because it's the first time we're coming out of the pandemic, and all guesses have, our guesses.
That's true, because we've not seen the normalized times for such a long time, right? Everything is pent-up demand or, revenge buying or revenge demand as well. So, yes, FY24 will be important to track in terms of normalcy of demand as well. Arun, in that case, you have, of course, these two parks which are coming up. Any other capex that you've lined up? What is the balance sheet looking like right now? Cash in the books, or will you be taking some more debt just to fund these expansion plans?
So we have a pretty decent cash in the company right now, because we've not done any major capex. We were supposed to start on Chennai, which got delayed. So this coming 2 years, I think we're going to have most of our capex come back. And so we're going to start with our Bhubaneswar park. We will be spending close to 150 crores there in the next 2 years. Then Chennai will be spending close to 300 crores. And then, of course, sustaining capex for our existing parks, expansions, those kind of things, maybe another 60, 70 crores for the next 2 years.
All right.
So that's the kind of capex we are looking at.
So, and obviously all of this would be internally funded, right? Because you have usually shied away from taking debt.
Yeah, so we don't think we will need debt for these projects, but then we are also looking at further investments in other states. We've been attending. We've been invited by many state governments to invest. So we are evaluating a few proposals in terms of asset-light models where we invest. With government support, those kind of things we are exploring. So if that happens, of course, capex will go up again, and at that point we will look at fundraise. We are not shy. I mean, we're not shied away from taking debt because we honestly had the opportunity. But now that we are seeing more opportunities coming our way, we will not shy away from it.
Okay, so in terms of opportunities, would you look at expanding your hospitality portfolio? You have one resort right now. Will you look at putting up more? Because this industry also has seen a lot of demand coming back.
Yes, we are seeing a lot of demand coming back, and I think the number of players in the segment itself is very small. So I think definitely there's a huge latent demand, and people wanting to go out, people wanting to spend time outdoors with family and friends. So those kind of things are never going to change. I mean, of course, the way we work and interact and everything has changed, but at the same time, people's need for entertainment is not going to change. So I don't see that being an issue.
So will you be adding more resorts in that case? That's what I wanted to understand. In FY24, what is the number? What will the capex be here?
So we are planning to expand our resorts by about 30 to 40 rooms, but it will happen over the next financial year, or maybe it will still a little longer as well. But we are currently running almost at 70 to 80% occupancy for our resort. And I think next year also is looking pretty strong. So that's why we are adding rooms. And once that happens, I think we'll be able to increase our revenues there.
One near-term and one long-term question. Quickly, if you could answer that. Near-term is that, with the heat waves, etc., could that impact footfalls if the summer is expected to be hot? That's one. And secondly, you are speaking about, new plants, etc. How long does it typically take for you to break even? And you were also eyeing the management piece, right? When does that start to flow in?
Yes. Yeah, so first question is about the summer. I think for us, usually, unless it's an intolerable heat wave, actually it helps us to, summer is usually good for us. In fact, we don't like it when it rains a lot during summer. I know I'm probably one of the few industries will say that, but for us, heat in the summer is okay as long as it's not unbearable, and I don't see that happening. This year, hopefully not. So I think demand will be strong. And the second question in terms of the capex, right? And the new parks. So we typically take about 24 months, which is 2 years to construct one park. And so, like I said, our Orissa park will be the first one that's going to come on stream, followed by Chennai. We are also exploring management contracts. We have not really done. We have not signed anything on as yet. We are still exploring.
Okay, Arun, so we'll get in touch with you when there are more updates on this one. Thank you so much for joining us today. So that's the word coming in from Wonderla Holidays. The stock has done well so far this year, higher in today's trading session.